I'm glad to actually have you with me here in Studio Parliament, West Africa.
Thank you for having me.
So let's start by, we know that later yesterday we had the federal government paying FAAC allocations. How would you say this impacted liquidity in the market, or how should we expect going forward this should impact liquidity in Nigeria's fixed income space?
Okay, thank you. For the FAAC was paid yesterday, as you mentioned, was roughly about over about 400 billion, thereabout. And this has actually, in fact, because the market has really been liquid. So this has impacted the rate of the market. Currently, OBB on overnight is at 2.43 levels. We see that staying for the meantime, pending when this is mopped up in the system. The liquidity also has affected the fixed income market as well. We've seen slight buying interest for the long-term maturity on that's for the NTB, which is currently trading around 4.5 levels, and the OMO bills, which are currently at 12% levels at the moment.
I see your latest report also hints about paucity of funds at Nigeria's I&E window. Could you talk to us about what's stifling funds? So
usually what we experience is whenever there's an OMO auction or maturity, we see the foreign portfolio investors inflowing funds into the market. Because there hasn't been any at this time, we haven't seen much funds coming into the system. We expect that by Thursday, when there'll be a maturity and where there'll be potential OMO, we might see funds coming back into the system. But for now, it's been rather minimal, as in the inflow I've been seeing into the system. That FX. So
Femi, I'd like you to paint us a picture of realities currently at Nigeria's treasury bills market, and where specifically would you say activities and interest by investors are skewed to?
You know, the policy CBN introduced us recently that banned the local players from investing in OMO bonds. We've seen OMO bills, right? We've seen them, skewed to move towards the NTB auction or NTB market, and the rates are declined between. Last PMA was at 5%, they're about 5.0%. So we've seen activity at that level. For the OMO, it's still pretty much the banks and the FPIs are there. On the fixed income security, now we've seen a lot of direction, being channeled towards, or attention being channeled towards the bond market. We've seen lots of buying interest for the 2021, 2022, 2023 as short-term maturities at the bond market. So we've seen more activities from investors, local investors, and individuals all alike at that market. So so we've seen that happening, at the market. We've seen interest in the short-term maturities, while we've seen less interest in the longer-term maturity.
Are we at the moment seeing any likelihood of early interventions from the CBN? I know that the year 2019 saw a lot of direct interventions by the CBN on the markets. Are we expecting any, or have we begun to see any early interventions by the regulator?
Usually at the FX market, we see them intervening on a weekly basis. That still happens even till now. Nothing much has really changed.
So what's with the long-dated instruments? I see there's some bullish sentiments you reported around that line. What's driving investors' interest in the longer-dated instruments?
It's just for the longer-dated instrument, it's just in terms of yield level. If you look at the short-term maturities, that is 21, 22, like I mentioned, they're currently at between 8% and 9%. For the longer-term, especially 24 to 9 maturities, it's currently at 12.5 levels, which is really significant actually compared to where the others maturities are. So we've seen that in terms of yield level, that's more attractive for investors.
So it's the DMO's first outing for the year 2020. How do you reckon investors would respond to this? DMO is set to issue today about 1.5 billion, 50 billion for the 23 maturities reopening, 50 billion for the 29 reopening, and 5 billion for the 29 reopening. We expect market to go bullish in this because of the system liquidity at this level. Market is very liquid, and so it just gives market the opportunity to invest in those instruments. So we see yields declining compared to what market is doing, because there's been a significant level of demand for such bonds. So at today, I feel that it might drop compared to the previous auction, which stopped at 13%. That's for 2049 maturities. We might see it dropping slightly, to reflect market a bit. Market currently is at 12.56 thereabout. We feel that it might stop at that level, at this auction. So for me, in less than 36 to say 48 hours, we'll see Nigeria's first MPC decision for the year 2020. How do you reckon whatever decision they make on rates would impact the markets in the short term?
So I feel this MPC might maintain the rate at where it is currently, simply because all things being equal, they should have reduced it to match the current level of interest rate at the at the treasury market where we've seen decline in yield. But because of the inflation figure that see right now, inflation keeps trending higher. So we feel that there might be, for us to hold it at current levels. So there might not be any significant impact in the market because it's still going to be at what it is.
So the key objectives I'm getting from your reports and feelers is relatively quiet market, bullish market. What specifically would you say are is your outlook for the Nigerian fixed income market in the near term, at least so to speak?
Okay, for this month, January, we have some maturities on the OMO side, right? And this might likely be mopped up by the OMO auction that CBN might issue. But in the next month, we see a larger portion of maturities coming into the market. We have about 2 trillion coming into the market. I mean, this might spur more bullish sentiment. So it's just wiser for any investor to probably take positions right now at this point. And, in view of the demand that might come in the next month, that's February. So after February, I feel that there might be stability in the market because we have lesser maturities in the market. So this might reduce the activity, the level of bullishness in the market. But to a large extent, market is driven by liquidity. And so this liquidity will continue to drive the buying sentiment in the market. So it might not be as bullish as it is currently, but we might see some stability, but with mild bullishness in the market.
So for you, it's ultimately position taking period. Many
Exactly.
thanks to you for your time on the show, Femi. Femi Ogundimu is a fixed income dealer at Access Bank.